Hello, Zinger Nation. This is Justin Roberti and Jose or J-Rod here with you today with
Hello.
Crypto Unlocked number 4. Good morning, Jose. How are you, sir?
Good morning, Justin. I'm really excited for today's show. Welcome, everyone. It's a pleasure to be here with you again, one more time, as usual.
Yeah, absolutely. It's beautiful. Love doing the show. Kind of a culmination of all the people we've been talking to throughout the month on our Twitter Spaces and through our work at Benzinga. So I'm a big fan of doing interviews in general. It's great to hear from some of the smartest people in the space. Today we're going to have Catherine Chen, investor and also a founder of Market X, doing a keynote presentation and hanging
You,
out with
you
us.
recently you
What's that?
recently published you recently published an interview with her, right?
Yes, I did. Actually, she's kind of a wonderkind because when she was only 24 years old, she raised $80 million for the startup that she was working for at the time, and now
Impressive.
and yeah, definitely. And Investment X is focused on doing deep tech, fintech, and SaaS. So definitely looking forward to talking to her more about what that experience is like. You know, being a young woman trying to raise money in this space where really traditional finance and DeFi are both predominantly dominated by men. So it creates an extra challenge. We love her hustle and her creativity and having done this fundraising. So definitely looking forward to more about that story. Then we're going to have a panel about the Web3 lending environment, both for businesses and also for individuals. Catherine will be on that with us as well. Also, the co-founders from Moon Mortgage and Alex from the Chamber of Digital Commerce. So that's going to be cool. And then we're going to be talking about interoperability with really a pretty supreme lineup of L1s. We've got Hack Network, which is part of the Cosmos environment. We've also got the global communications lead from Axelar, and we've got Feroz from Tron coming on with us today as well. And then to end out the day, we've also got Baron Davis, who is a two-time NBA All-Star, who's switched into being an investor and an entrepreneur within the Web3 space. He's going to be telling us about some cool projects that he's done as well. So it's going to be an exciting day.
Yes, and this is just a snippet of what we are preparing for the November conference, right? Can you tell the
Yes.
audience a bit more about the November conference?
Absolutely. It's going to be fantastic. I mean, we've already got many heavy hitting kind of projects on board. Grayscale is going to be speaking. I believe that Polygon is going to be there. We're going to have Cosmos there. We're going to have Tron there. So right now we're just booking major guests and major projects. And like last year, it's really turning out to be like, it's gratifying to see the quality of guests that we're able to pull in just through the work that we do throughout the year. So I think that's really going to be an awesome show. It's coming up on November 14th, and it's in New York City. You can definitely already look out for that date. Go ahead and save the date and join us if you can. It's going to be fantastic.
We're also having advisor from Heathrow Airport. We're having Alan Bay from Aventus, that it's an enterprise solution provider for Web3. And we're also having BitGet, not sure if I already mentioned that one. And big names coming, Axie Infinity. We're going to cover most, or I would say every vertical in crypto, not only cryptocurrencies, not only blockchain. We're going to cover from music, NFTs, real world application of NFTs, also AI, banking, regulation. So it's going to be a really, really big gathering. And we hope you are here. We are starting to sell early bird tickets with a discounted price. So we're going to share all the relevant links in the comment section on the YouTube stream. Should we start with the interview? I'm excited to speak with Catherine.
Well, it looks like Catherine's off camera at the second, but I'm just going to add that what I like to see about the show, what I really like in working with you, Jose, and in working with the team in general, in terms of planning the content for this one, is we've got a really strong focus for the upcoming show in November on practical use cases by projects. And in other words, the way that crypto is actually, and blockchain, Web3, is improving lives. It's not a matter of pumping coins. This is not a your 2017 conference where it's all about the hype. We're here to talk about the real projects that have been building during this down market. And it's true what they say. There apparently has been a lot of growth and a lot of building of infrastructure during this market. So that'll be exciting to talk about as well.
Yes.
All right. Yeah.
Is Catherine ready?
I think she is. All right, Catherine, you ready? Let's go ahead and bring her on. So pleased to have her with us today. Hi, Catherine. How are you today?
Doing well. How are you?
Good, thank you. Here, let me go ahead and move you over to this spot. There we go. So thank you for taking the time to join with us today. You have a remarkable history of being able to fundraise successfully and really compete in what has been for, well, probably thousands of years, honestly, but certainly in recent history, widely considered a very male-dominated industry. Why don't you tell us a little bit about how you got your start? And it's so young. I mean, I was still trying to work out getting my arts degree when I was this age, and you were raising 80 million for a startup. How did you get on this incredible path?
Yeah, thanks, Justin, for having me. A little bit about what we do. So I founded MarketX Ventures when I was 24. When we first got started, the company is really focused on achieving the mission of bring private investments to everyone. So we basically source deals in Silicon Valley and other high-tech areas. And then we offer these opportunities as private investments, SPVs, direct investments to the mass consumer market. So I started this business in 2014 when, the whole market for venture was just getting started. Not that many people have heard about it, especially for folks, I always use my mom as an example. When she heard about you can actually invest in companies like SpaceX, Airbnb, she was like, what, really? So when I got first started, I was backed by 12 billionaires coming from the tech space. They've all built very successful companies. A lot of them actually are kind of our age, nouveau fintech founders in Silicon Valley. So to answer your question, I think what really helped us in our growth trajectory is that I sort of really divided my attention across 3 different geographies. When I first got started, I was working as an investment banker at JP Morgan, Deutsche Bank, Rothschild, London, New York, Hong Kong. So I grew sort of my investor base ever since my first job out of college, or actually during college. And then when I moved over to Silicon Valley, that was the IPO boom, right? When you saw all the top companies out of Silicon Valley, from fintech, different, vertical SaaS companies going IPO. So we just really rode the wave in terms of the mass consumer market adopting a new view on private companies, how you can be part of that journey when they grow to become unicorns. And lastly, we also spend a lot of time growing our international audience. So you can see today we have audiences from 60 different countries investing with us. We have folks from Asia, from Europe, from the Middle East, as far as Madagascar. We also have investors from faraway places. So to really sum it up, I think we were focusing on asset class that was growing very, very fast at the right time. 2, we really offered this asset class to folks who never had access to pre-IPO. And to answer your question, ever since I was 12, I worked for my mom at her clinic as a receptionist, as a marketing specialist, as everything. I coded her website. So all part of the journey is, start entrepreneurship when you're young and work your way up. I've always wanted to own my own business. It's really amazing to see female founders now finally getting the funding they need and they want. When I first got started, sadly, it was very difficult to get funding in Silicon Valley. So I had to, go to 4 different continents to find potential investors who are invested and interested in what we're building. So long story short, be at the right place, right time, growing a market, perhaps potentially wasn't so mature yet, was the right decision for us.
Mm-hmm. Sure, you're absolutely, looking for investments in some pretty leading edge stuff. And it sounds like in order to win people over, especially when, when you're approaching people, you're very, very young. They're not exactly what they're expecting when they're looking for people approaching them about capital investments. And from what we've spoken before, when I wrote the feature for you on Benzinga, which everyone go look for that feature. It's a good little story. It seems like you had to take a very personal approach to really stay on these people, and that's kind of what impressed them. Do you want to tell us a little bit about that?
Sure. Yeah. So maybe I can give you an example of how we first got started. When 2015-16, when very few people have heard about ByteDance, the founding company for TikTok, we were the first ones to offer this pre-IPO opportunity to folks who wanted to invest 100K, 200K. So how do we do that? Building relationship with the founding team and also early investors who are part of that game very early on. In 2013, 2014, when very few people have actually used the app itself, we've already been, spreading our seeds, building key relationships with venture capitalists, founders in Asia. So from there, we were able to source 40 million of ByteDance shares, and we work with top family offices, high net worth individuals, and also hedge funds. The who's you can name. Everybody was interested in buying a pre-IPO deal at a discount. And that was very difficult to do, even for top investment banks. So that's where the niche market we decided to go in, focus on very top deals in the venture space and offer it to folks that previously didn't have access, either due to geopolitical access issues, or it's potentially because the minimum size to enter this market is too high. So we solved both access and also, minimum ticket to invest, these two problems. And that's why we were able to successfully complete that deal and hopefully, offer these type of 10x opportunities to folks that want to be part of this private markets journey.
Mm-hmm. You told me a story, though, when you were first finding the original cohort of 10 billionaires that invested in your project, something about finding one of them in a different country at like 12 at night, that sort of thing. You're pitching on the train platform. Do you want to tell that little anecdote?
Sure. I sometimes refer to that as like the Dragon Ball Z story. Sometimes you gotta get all the balls in together to make this happen. So I had to go to 4 different continents to find my first investor. Not just all of them, but like one person. I had to go to Israel, meet with him, talk to him about what we're working on. Then we met in Asia again at a train station at 2 a.m. in the morning. I walked him through my grand plan of building MarketX. Sometimes the weirdest timing and, the example of giving that 2-hour explanation at a train station is what makes or breaks it. So for me, I really, I thank the investor who, gave us a shot at this, but at the same time, I also appreciate him putting me through that journey, because I think he was trying to teach me, if you want this done, you got to work hard. You got to prove to us that you got what it takes.
Mm-hmm. What advice do you have for women that are looking to break into this space? It seems like there's a little bit of extra hustle that has to go into it. I'm sure, fortunately, I think more women are interested in finance than ever before. More people are investing at a retail level than ever before. If people are looking to get a start, what would your advice be to them?
I think my advice would be twofold. First of all, I think we need to really surround ourselves with the right people and, keep your intellectual curiosity open. So for me, when I first got into the crypto space, I met a friend of mine who mentioned, hey, would you like to meet this guy? He's like the genius of crypto. I'm like, who is it? So, Vitalik, he's in San Francisco. We have an event in 2014 at some dungeon area in Soma. This is in San Francisco. It's this like underground area where 50 devs met up and talked about, what's the future of crypto. And I said, yeah, I'm interested. Let's go. So, being the only female person in this dungeon area, listening to Vitalik talk about the future. And I said, would you like to actually expand your network elsewhere? Let's go to Asia. Let's talk about what we can do elsewhere. I just wanted to contribute to the development of such amazing innovation around the world. So that's first thing. Second thing, I would say, be original, actually adding value wherever you can. So when I first got into the space, clearly, every conference you go to is like a sea of men and me. And sometimes people might find that intimidating. For me, I think it was actually really helpful because you're the only person a little bit more differentiated. So I try to be around folks where I can add value by connecting everybody. I grew up on 3 different continents, and it's very helpful when you try to bring disparate groups together. When we're trying to grow this industry at its infancy, it's so important to connect top players in Asia, in Europe, in the Middle East. And my team today, even though we're a small team, we're on 4 different continents. So being at the right place and help people grow when they're just getting started. Now, tons of our portfolio companies are unicorns, decacorns, you may call. They still remember you when you join them in the beginning phase.
Well, fantastic. Well, it's great to have you with us here today. We're going to go ahead and move on to the next panel, I think. We thank you so much for taking the time to share your story with us.
Thank you.
Fantastic. Thank you. We're just going to take you off, Catherine, and then bring you right back on for the panel so Jose and I can have our little banter. Hey, Jose, how are you, sir?
Truly inspiring story. Truly inspiring story.
It just goes to show what can be done, it's fantastic. The idea that the same thing that makes you, maybe stand out and not fit the mold for what people are expecting can also become an advantage if you have that kind of hustle where you're ready to be known and differentiated as, being the only woman at the conference and so forth. I admire the bravery. Yeah.
You need to aikido any circumstance in your life toward a positive goal. I think it's an amazing example and it's inspiring. Let's move to the second panel. What are we going to discuss?
Well, we're going to discuss basically the function of liquidity here. In other words, how available are loans? We're going to talk a bit about the mortgage crisis. And can Web3 be somehow helpful in that? Can crowdsourced, fundraising essentially be helpful toward helping people access mortgages? And we're going to talk about. Catherine's going to interject from a capital investment perspective as well. So I think it'll be very interesting. We've got great guests coming up. It looks like we have everybody. So why don't we go ahead and add them? You ready to go, Jose?
Let's go.
All right, let's go. We're going to bring on Tristan. We're going to bring on Aaron. These are the guys from Moon Mortgage. We've got Catherine again. And we've got Alex. All right. Yeah, all right. That looks good. They gave us a new little setup here today. Hi, Tristan. Good morning. How are you, sir?
Doing well. Thanks, Justin.
Do you want to quickly introduce yourself and Moon Mortgage for us?
Sure. I'm a co-founder and COO of Moon Mortgage, here with my partner, Aaron.
Mm-hmm. Hey,
and
great to meet you all.
Aaron, would you like to introduce yourself as well?
Yeah, absolutely. Name's Aaron Nevin. I'm co-founder and CEO of Moon Mortgage, and Tristan and I have been working to solve the issues of crypto investors for about the last year and a half or so.
Right. Liquidity is everything, isn't it? I mean, availability of funding, access to funding. If there's any goal that the Web3 should have its eyes set on, it would be that there are better ways to work our traditional finance, after all, as laid out in the original Bitcoin white paper, and those are the lofty goals that we aspire to. Well, thank you for joining us, gentlemen. Alex, why don't you go ahead and introduce yourself as well? Introduce the Chamber of Commerce a little bit about your background.
Hey everyone, Alex Chezik, the Chief Operating Officer at the Chamber of Digital Commerce. We represent the industry in Washington, as well as fight for the U.S. to remain, so far, the number one place for digital assets. My background is I've been around the space for since 2016 in Microsoft, and then ran a company, was at an exchange, most recently doing listings. And then thought, you know what, this is the fight of our lives for the industry. So I'll lend a helping hand in Washington, and trying to. There's a lot of stuff happening today, yesterday, so it's quite a busy time for us.
Interesting time to be at the chamber.
What's that, Jose?
Interesting times to be at the Digital Chamber of Commerce.
Yeah, absolutely. Gary Gensler's making your job very easy, I imagine, Alex.
We're best friends. We have drinks all the time.
He's such a lovable fella. Well, we appreciate you coming on and joining us. And of course, we already know Catherine. Everyone, it's the question going in today, trying to frame this is like, well, first of all, we are, of course, in a bear market for the past 18 months or so, at least in the crypto space. But really, even, to speak to Catherine's world as well, even outside of the crypto space, rates have been going up. Inflation is high. There are supply chain issues that have persisted since COVID. Things are simply becoming more expensive, and there has been less to go around. So it's created a bit of an existential crisis, both for the individual investor or home buyer, and also for people looking to raise funds. So, blockchain has exhibited a great ability to be able to, and this whole Web3 phenomena has exhibited a great ability to be able to facilitate the crowdsourcing of this kind of funding. It seems like we are hurtling toward a housing crisis within the next generation, or at least a greatly reduced rate of home ownership if mortgages continue to go up and incomes are staying kind of steady. What have you seen in that way, Tristan, and how is blockchain ready to address that problem?
Well, I think it's kind of two different problems in a way. I think also a big housing problem is, private equity companies and other really large firms buying up large swaths of assets that then allow the common person not to also buy real estate. The nice thing about the blockchain space and what we've created is we're essentially creating a vehicle for funding that other borrowers would not be able to utilize. If you are someone who is rich in crypto, who doesn't have other traditional assets, you're kind of stuck in the traditional funding scenario. You would have to sell your assets and buy in cash, or you're kind of stuck, or you're paying an exorbitant rate. With our product, essentially, you're able to collateralize your crypto to then buy property, which inherently opens up the amount of people who can buy property today at any given point. And going into the future, there's a lot of different ways to, as you said before, crowdfund or do other DeFi mechanisms possibly to do something similar. I think that comes a little bit later as Web3 really expands and regulatory frameworks expand as well. But currently, there's already options.
Mm-hmm. Well, that's great. And, Catherine, it occurs to me that when we look at MarketX, that's one of the interesting things about MarketX, the idea that you could actually leverage your crypto into buying, some of the more exciting, but still, traditional assets and invest in Tesla, that sort of thing. Are we coming to a place where, people who are holding some crypto have more flexibility in terms of what they're able to do with it?
Yeah, thanks, Justin. First of all, I just want to clarify, we are a marketplace that allows folks to use their crypto to buy pre-IPO assets. So think about, the roof stock of the world. If you're interested in real estate, if you're looking at deep tech, you can buy Anduril. We're looking at helping folks leveraging their crypto in a way during turbulent times. You can still make very decent return, but at a much lower risk profile. So that's what we're aiming to do. Secondly, actually, very interestingly, getting to know you guys at Moon Mortgage, we're also somewhat, involved in the lending market. Let's say you're a pre-IPO employee, work 10 years at Waymo, and you have zero liquidity from your equity. We actually allow you to borrow against your shares. So that's another thing we're offering. And now we're integrating with crypto, which I like to call this Web 2.5. We're trying to help folks to borrow against, illiquid assets, such as their crypto, such as also their pre-IPO shares, to get more liquidity.
Mm-hmm. So it's clear that the Web3 space is changing and revolutionizing the lending industry. Would you like guys to extend a bit more on what's the impact of Web3 in all the lending structures?
Let's go ahead and take that over to Alex, since we haven't heard from him yet. Alex, what do you think? Are we actually living up anywhere near to the lofty goals set out in so many white papers? Are we actually helping to increase access to financial services for regular people? We've been talking about it for 10 years now.
Wow, what a question.
I like to give you the big ones, Alex,
Yeah,
because I know you can handle them.
that's a good one. I think the short answer is no, but that's not necessarily a bad thing. I mean, I've never used Moon Mortgage or MarketX. I think what you guys are doing is both great ideas. Lots of risk, obviously, with a volatile asset and the volatile crypto assets, and then with illiquid stock, so to speak. But doesn't mean that the ideas aren't good. Ultimately, the promise, especially at Bitcoin, is to hold it, borrow against it, which I think everyone is doing in some sort of way. You know, your question about are we giving folks access, more financial inclusion? It's hard. I mean, I think there's global and then there's the US. I think in the US there's no. Globally, yes, definitely. Right? Because globally, when you have oppressive governments and you have no way out, and people jump to stables or jump to Bitcoin, which we see a lot in Latin America. We see, even India is a powerhouse of a country, as capital controls. When you have that type of environment, crypto has already fulfilled some of its potential for the people that have been brave enough or educated enough, knowledgeable enough, aware enough to know about it. In the US, it's hard. We're a very mature market. We can email and Venmo people. You can Apple Pay people money. That said, we have a huge minority population that's actually still kind of disenfranchised and unbanked. So we have to take care of that. But because we're a mature economy, when we think about Congress and which is what we're doing, is trying to push Congress to actually create sensible legislation, a lot of times the feedback we get is, well, Visa works, MasterCard works, and so on and so forth. So there's a lot of risk aversion not to break the goose that's laying the golden egg. And the goose that's laying the golden egg, without a doubt, is the U.S. economy, and likely will be. We'll get there. I mean, I'm very optimistic. Once crypto starts being included in IRAs, in retirement products, in mortgage products, and various secondary markets, like it seems like what MarketX, what you guys are doing. Once you're able to find and source liquidity or use crypto as a collateral, right? Then you start opening up opportunities for the average person to understand, hey, this is an asset that I can hold. And we're not even talking about building on crypto rails, on Bitcoin rails, on Ethereum rails, and so on and so forth. So the beauty of crypto is that it's very multifaceted. So yeah, the answer is, yes abroad, no in the US, but we're working on it.
Tristan, I jump in with a slightly different.
Maybe Tristan, Aaron, can you extend a bit on your thoughts on how blockchain is changing the lending environment and maybe what we can expect for the future also as it's still developing?
Yeah, I think there are a few ways to kind of think about that question. The lending market in crypto is still pretty immature. There's not a lot of liquidity. You're kind of capped in the amount of loan size you can actually offer, right? If a $20 million block of Bitcoin will drastically move the prices in DeFi, then you have a really hard time actually getting Web3 to a point where it can support institutional investors. I agree completely with Alex that the Web3 use case for developing markets and almost everywhere outside of the US it has a lot of legs, but it's going to be a long time, I think, before we see any sort of Web3 lending maturity based in the US. There's almost always a better solution with a centralized product in the US anyways that will be cheaper, more secure, and ultimately provide more flexibility to those borrowers. So one of our second products actually is what we call a trade and borrow account. It's essentially the first crypto loan margin account. So users can deposit their crypto, borrow up to 40% loan to value against it. So you deposit $100, you can borrow $40 against it. But then we also give you the ability to trade those assets posted as collateral. So you can trade that Bitcoin that's posted into ETH or into cash, sort of manage and mitigate your own risk. That's utility you're never going to be able to get from a pure Web3 product, at least not anytime soon. And we do this with the backing of Anchorage Digital. As far as Gensler is concerned, probably the only real qualified custodian in the space. So I think to that point, there's a lot of room to grow in Web3, and we're excited to kind of be along for the ride and see how it affects a lot of the developing world.
Yes. So
yeah. Go ahead.
The U.S. industry is the biggest market, we all know, right? But the accessibility for loans is it's much more handy than in other countries. For example, I live in Argentina, and taking a loan is something you would never imagine, because here the interest rates are like my high. So don't you think that maybe focusing on other markets will also help develop the tech? Because there are markets where people don't have access to loans on the mainstream industry, like on the old school loans. So I think that people comes here to change that kind of accessibility and make it like wider for the industry. It's easier for you to maybe access a Web3 loan instead of a regular in some countries. For example, you can access
For sure.
with right. What were your thoughts on that?
Yeah, no, absolutely. I think, again, that's a great use case for that's a great use case for DeFi in general, right? Like, you can't, in a lot of countries, you can't necessarily trust, local businesses or local government to run something, void of scams and manipulation, but you can potentially trust a global DeFi network to do that. Again, awesome use cases. The reality, though, with Web3 and DeFi is that your interest rates, for the most part, are always going to be higher than anything in the centralized space. And that's just because centralized players can always access capital less expensively. You look at, so like mortgages are a really interesting place to sort of build a theory around, right? So as an investor, if I'm interested in safe fixed income, I can go and buy mortgage products, which yield right now like 7%. So if you have, conservative fixed income products paying, 6-7% right now, and the more risky non-qualified mortgages, but still backed by real estate in the U.S. and strong cash deposits and assets paying up to like 12 and 14 in some cases. I've seen even higher. It just means that the trickle down, the capital that is available to be lent out in crypto, is always going to be at a much higher rate. Albeit, if that's the only thing you can access, then it's great that exists, and we're excited that exists. It does create a lot of access to opportunity that didn't exist beforehand. But it's for this foreseeable future. It's you're going to be paying for it.
Very interesting. It occurs to me that if you look at like when Elon Musk, for example, set up his charitable fund, he used Tesla stock as the backing for that, and yet using crypto as collateral to be able to take out a loan is kind of a new function. Is this just a matter of making what has already been available in terms of variety of financial instruments and variety of ways of using them? Is this just a matter of catching up for the little guy what has already been available to the super rich up to this point? Alex, what do you think of that?
So did you say, well, what do I think of the super rich, Justin?
If you want to tell me what you think of the super rich, sure, that'd be great. I'm no fan of Musk's personally, but no, I know that when he set up his fund, he was using Tesla stock to collateralize that fund. So clearly, this is happening. This is not a totally sui generis idea. Are we just kind of playing catch up in terms of retail investors being able to use crypto to collateralize loans?
Well, speaking of the super rich, I think the super rich figured out the way the game, so to speak, is played, and we can go back and look at the history of the people in the crypto space are all about Austrian economics, and some people say abolish the Fed. I won't comment on any of those, but the way our system is set up now is that, especially from a financial perspective, you can use debt very strategically. And the people who have figured this out, business owners, private family offices, and so on, have figured out how to do that well. Retail investors absolutely can use crypto to do the same thing, with a big caveat. The big caveat is crypto is a very high vol asset. It's a high volatility asset. So you can get margin called in crypto very, very quickly. In fact, I was speaking with Justin about this yesterday, and I'm interested to see what the Moon Mortgage fellows have to say about this. But right now, let's take the U.S. In the U.S., in many Western, I think, economies, but in the U.S. especially, the government subsidizes your house, essentially buying a house. There are, there are easy ways and programs to get mortgages. So the house is seen as a very pristine collateral that you need to live in it, and the interest rates on home equity are typically the lowest interest rates you can get, more or less, right? We won't go into details. But what we've seen in 2008, when the housing market collapsed, it's actually quite hard to foreclose on a home and then sell it on the market at the same price that theoretically the house is priced at. And so, but it's very, very easy to foreclose on Bitcoin that's sitting in collateral, or a crypto asset. It's instantaneous and within a second. So theoretically, over time, as the volatility of a very high growing, innovative network shrinks, I believe that the interest rates on crypto are going to supersede, or essentially be lower. Than it'll be a much more pristine asset, Bitcoin specifically, than homes in the US. And we will be able to actually borrow against crypto at a lower, less risky rate, because the lender does not need to price in the risk of foreclosure and take a certain haircut on that price. If a Bitcoin, market dips and a Bitcoin goes from 30,000 to 20, and that's your margin call, well, boom, the Bitcoin is hypothecated really, really quickly, without any risk of not being able to hypothecate that Bitcoin, as long as the wallets are set up correctly. So will this happen? Absolutely. Is it happening now? Clearly it's starting to. People just have to be very careful, because as of right now, the volatility is extremely high in these assets, and you can have a temporary, literally intra-minute market dip. What we've seen on Bitcoin, the mini crashes, especially on different exchanges, due to different liquidities, where it dips $10,000 and then recovers. But within that minute, you just got margin called, and while the price is like 30, 30, 30, 20, 30, 30, 30, 30, that little blip to 20 just got your Bitcoin taken from you. So right now, you just have to, anybody doing this has to have very, 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 very tight and smart and conservative, I think, a conservative risk profile. And maybe this is where we need third-party companies and private enterprise to come in and help consumers set up those mechanisms.
Great.
That's a great,
Catherine.
Therefore, actually, we had experience from both ends, the traditional side and also the crypto side. So back when I was at JP Morgan, we were actually in the private bank, and maybe that's what Justin and Alex were referring to, the ultra rich. We were helping billionaires basically borrowing against their shares, right? This is like very widely done. It's like the unspoken, secret that everyone can actually borrow against their private shares. When I started MarketX in 2015, we were also doing this with a lot of employees of pre-IPO companies. So think about, all these companies that were already valued tens of billions. They also, kind of had the same problem. The ultra rich, the founders had this opportunity to do that. However, the rest of them, the employees, didn't have the opportunity. So we were trying to fix this issue by creating a platform that allows employees to also borrow against their shares. When it comes to the crypto world, it's slightly different. Like Alex mentioned, these things can get triggered right away. I've seen people borrowing against, their crypto, and unfortunately, within days, this can go and cascade a huge problem. It's across multiple protocols. Speaking of which, I, have heard through the grapevine, someone is down 80 million, right? And he must sell his houses around the world in order to recover this. And by one person going down actually affects multiple protocols. So this is something that's actually happening as we speak. What I see needs to happen is combining traditional finance, figure out what are the regulatory and guidelines we need to input in crypto to make sure we can prevent big catastrophes like this. So it's not that we shouldn't allow people to do it, because I think it's a great financial instrument that provides liquidity in the market, but we have very little guidelines and guide rails in terms of what can be done, what can you borrow against, what happens when the liquidity is triggered. How do we make sure that people have enough collateral to actually face these kind of very dire situations? So combining our regulatory bodies, leveraging existing practices in traditional finance, I think is the key to solving this problem.
Well, in the peak of the NFTs, I remember people put NFTs as collaterals. Tell me about high risk loans, right?
Yeah. I would love to just interject and add one little fun tidbit in that there's been a lot of periods in time where Bitcoin's actually less volatile than Tesla stock. That's actually been observed a few times. It's one of the most volatile blue chip collateral that exists today. And there's a lot of things about, when you're posting so much collateral, can you even liquidate all of it? Is his liquid net worth actually what it is on paper? But in the terms of Bitcoin, in the terms of flash crashes, that's all about the design of the protocol, all designed about the centralization of the oracles as well. So if you're taking multiple price feeds from multiple exchanges, that never happens, because anyone who's arbing the market buys that in an instant, and it's never big, just due to the fact that it can't really be big for very long, because there's so many people buying all the arbitrage opportunities in traditional finance as well as crypto. So that's something that doesn't really happen unless you're kind of sloppy with your inherent design. There's also derivative products that we could offer, like, let's say, akin to PMI, where you can buy derivatives to hedge out XYZ level of volatility for a certain period of time for some level of premium. So people have a lot of flexibility in the underlying asset. We also give people the ability to trade their underlying crypto into cash or another crypto of their choice, let's say from Bitcoin to Ethereum or Ethereum to Bitcoin at any point in time. So that allows people also to hedge out the risk if they see the market is moving against them and they don't particularly feel comfortable, because we're also cognizant where people can't sell their home overnight. In most places in the US, it's a 2-week or longer process, even if you get a bid on day one. That's why we created that trading functionality, so people do have an out, and you can also use derivatives as well. There's so many different options, but we're essentially just trying to mimic what exactly happens for any stock loan in crypto. That's essentially what our trade and borrow product is. That's a pure crypto loan. And then for, Moon Mortgage, it's essentially allowing people to leverage their crypto so they don't have to sell it. Because if I had $10 million in Apple stock, I would never sell $1 of it, and I would just fund my lifestyle based on that asset pool. And I'm basically betting on the appreciation of it. If I didn't think it would go up, I would sell it. But that's where everyone is who's made significant money in crypto and who will in the future. You want to hold on to the asset for tax purposes, and also just because you believe in the underlying.
That's true. There's something that happens in crypto that, for example, you own a few Bitcoins and Bitcoin goes up and people change their lifestyle before cashing or before taking profits. They just change their lifestyle, seeing their balance, and then bear markets can, and you start getting debts, right? That's a common and a sad thing. That's why I think education and financial education is so important.
Yeah, 100%. I'll say I definitely agree with what you're saying. When we first got started, we really focused on financial education for the masses because, before crypto, right, 10 years ago, it was actually very, very difficult to get liquidity, even from pre-IPO stocks. What we've noticed is that, maybe the top 10% of the population, like, if you always been part of the Silicon Valley crew, you're the Elon Sergey of the world, you probably know how to borrow against, how do you actually leverage, how do you create foundations, tax, preservation, all kinds of strategies. However, as a mass affluent user, this is a term we use to basically, we're talking about 30 million Americans today. Very few people know that you can actually get 300 to 500% return from investing in private companies, and also to borrow against those holdings. So just as Tristan mentioned, if you have Apple stock, for 10 years, you don't want to sell. Well, if you have shares of the top self-driving company, if you have shares of the one company that's going to take you to space, you also don't want to sell. So you want to borrow against it. That's where we see the connection between traditional finance and also Web3. What I envision, and also coming out of Paris ECC last week, is really exciting that the innovation that's happening, ZK knowledge, right? How do we actually leverage this new innovation in what we do? But I wanted to actually come back to Alex for a bit, because I noticed you worked at OKCoin as well. Coming now where you are today, I'm curious, how do you think about the US position when it comes to crypto regulation, right? Where we are, looking at London, right, being another UK coming up in terms of innovation, allowing startups to prosper. We have teams in Zug and also in Singapore, Dubai, right? These are the other places that are really growing this digital asset, industry. How do you think about sitting from both the, angle from the US and outside the US? Is this really the right path for US startups?
Yeah, it's funny that you mentioned this. This is a very pertinent question. I just, before this, I got off of Twitter Spaces with Mario and Scott Melker from the Wolf of Wall Street, and we were talking about the same thing. Look, I won't kind of sugarcoat it. It's tough in the U.S. now because of, frankly, unfriendly regulators and lack of clarity. We're working hard on that. I'm optimistic. Maybe not in the next kind of year. I know in crypto a year is like ages, but in the long run, we're seeing a lot of positive moves. One, outside of the US, people are building. When I was at Coin, to answer your question directly, we definitely have seen a shift overseas in terms of jobs, positions, and leadership. It's happening, and when we go to the Hill now, the friendly politicians are asking us to give use cases of companies leaving the US. People are still kind of having a presence in the US, but it's a token presence. Most of the net new dollars are going abroad. They're going abroad, one, because of better regulation, two, with this unclarity of security versus commodity for tokens in the US. A lot of projects just cannot come up with the same crypto mechanisms that they can abroad. And so when you cannot do the same, when you're thinking about tokenomics and you're kind of crippled and you're not sure what you can or cannot do, de facto, you're at a disadvantage compared to your peers that are building in London or building in the UAE and so on. So we're seeing this shift. I'm very optimistic in the US. Look, BlackRock just filed for an ETF. They don't do that. They're the kings of ESG, and the big Larry Fink, the CEO, is a big Democratic donor. So I think that's a clear signal. Vanguard, third? BlackRock is the largest asset manager in the world. Vanguard, the third largest, I believe, just bought 10% share in Riot. Riot is a Bitcoin mining company. Again, the State Street is a big, I believe, shareholder of Riot. There are signals in the market that's going to swing the other way. SBF did us no favors. I mean, that took us back an enormous amount of time. And, he made a lot of people look embarrassed. And that's not, you don't ever want to make a politician feel embarrassed, and especially for taking funds. So we have a hole to dig ourselves out of, but this is literally why I joined the chamber, because I do believe in the space. I do believe in the good that it can bring. And so, Catherine, I think the U.S. is coming back slower and more tepidly and cautiously than I think the rest of the world. London is all in again, like Hong Kong all in. Singapore has been all in. UAE and Dubai, they're going kind of strongly. So we're going to come back. I'm very optimistic. But right now it's, it feels like the bottom is in from from a feeling kind of perspective, but but it's not. It wasn't pretty. The last 12 months were not pretty, and companies have left.
Yeah, that's really great to hear, Alex, given that, as a company, we've grown from day one, 2014, out of the US, Silicon Valley, Asia. But now it seems like all the top folks that we're speaking to, Balaji is also somewhere. When we were speaking in Riyadh, he was like, we're building network state because there's no way to stay in the US anymore. And, when you think about all these different countries, we noticed we work with FEMA in Switzerland. When we talked about tokenizing real assets and bring, pre-IPO on chain, they were very supportive. Say, come to Zook, build a team here. When we go to Riyadh, even MBS, the top guy was like, we want to bring 30,000 Ethereum developers to Saudi. And I was wondering, wow, are there that many, period? When we look at all the other governments who are really trying to be at the forefront of this innovation, financial regulation, how we can be part of that as a leading country in the world. I would love to see more people like you to help us push this, forward.
Hey, listen, I mean, as a small shameless plug, but it's true for anyone here or anyone online. Frankly, we need all the help we can get. Our members actually craft legislation or answer a lot of the stuff in Congress. So if your industry or you want to personally support, we frankly need all the help we can get. This wasn't supposed to be kind of an ask for support, but guys, if not now, then when? If not us, then who? Truly. And I try to live by it. I left an exchange with all the upside, and I'm going to a nonprofit, which is a different career path than I've ever thought, but I would take. But if not now, then when? And if we really believe in the space, going out and educating these folks and showing them the way, and sometimes it's painfully frustrating, but I really believe the U.S. ultimately gets it right. But we just need people to, lend a hand and get it right. And one of the things that we do, a small little plug for the chamber, is we do these things called fly-ins for our members. We take our members. Today is one of them. Our whole team is on the Hill. We take our members and we take them to congressional offices, House Financial Services, Senate Banking, et cetera, even Elizabeth Warren and the other folks we speak with all the time. We just have to have these dialogues and then show them companies that are actually building and doing and creating jobs and helping improve people's lives. And that's the only way to get the stuff done, right? It's the only way. It's just like, it's almost like a, good global corporate crypto citizens. We need to, this should be a part of our, you have 90, you have your budget, 5% of your budget, whatever it is, should be allocated to this because it matters. Without policy, without clarity, none of this can get done. Anyway, sorry for the soapbox, but I felt like it was a perfect opportunity.
Yes, it was a great question, Catherine. And moving this question to Moon Mortgage, is this hostile situation and attitude towards crypto in the US making you rethink your business structure or making any changes, or you're planning to wait? How is that affecting your business?
It certainly made us consider our next steps. Ultimately, the U.S. has the best real estate market in the world, so we plan to forever offer this mortgage product in the U.S. Eventually, we'd like to obviously expand that as well and help crypto investors and holders all over the world. But as far as the trade and borrow product goes, it's a matter of acquiring the proper licenses. We certainly plan to take that. The planet over, there is a lot of folks who need access to capital through trusted parties, in Singapore and Dubai and Hong Kong and then London. We certainly plan to expand there as well. But we're excited to be based in the US, to be a part of the local environment. Our take, Tristan and I have been in the space for a long time. We've watched, great companies fail due to greed. We've watched terrible companies succeed in the short term due to lack of oversight. It's time for adults to be in the room and to build a company in the space with the long-term vision of supporting the ecosystem, and that's really been our stance. So we're excited to be doing this in the US. We're excited to have had the opportunity to jump through all the legal hoops and acquire all the proper licensing and to do everything completely above board. And that's how we'll continue to operate.
You gotta fight the battle.
Absolutely.
I mean, I think
Nice.
also really, mirroring Aaron's message, right? We also started out as a, U.S. regulated SEC FINRA, approved company. And when we first got started, it was very difficult to even educate how, SEC perceives what we do. We had to, at one point, print a truckload of every client message and send it to the SEC to verify what we do is legit. And, dealing with a lot of SEC commissioners now spending millions of dollars every year on compliance have definitely taught us something. And that's where I think it's really exciting to see veterans from Wall Street finally jumping into this nascent industry where, in beginning, it was all engineers who were really, really smart, don't get me wrong, but they have very little knowledge about how traditional finance is done. So when we first worked with actually OK Coins, funny enough, I remember one of my friend who was head of strategy there. I was one point, it was like, I need to get a place to stay. Can I stay in your car? I was like, wow, this is a very interesting times. This is back in 2014, of course. And now obviously he's like a crypto billionaire. When we meet people so early on and see what everyone's strategy was, noticing how, sometimes you really take a long time for the mass market to get used to, learn exactly what's happening in terms of innovation. But we're here to really help understand what are the proper ways to adopt a Web 2.5 strategy, whether it be finding liquidity from some of your illiquid assets to understanding what is the proper way to actually adopt this new technology. For example, in the private market space, it's very difficult to sign subscription documents to actually get a company to approve every single transaction. And that's where with ZK Knowledge, this is actually going to be very, disruptive to the private markets as well. So that's why we have incubated another platform called Infinity Finance to actually enable that. But onto, the next chapter, very excited to see other, founders are also looking to educate multiple markets and governments and helping, push this entire revolution forward.
Mm-hmm. That's fantastic. We're just approaching. We've got 2 minutes until close. We're just looking for kind of final remarks here. We'll go ahead and go down the row. Tristan, Aaron, if we're looking to raise some capital either for a business or looking to get a home mortgage, what are the things that we ought to consider if you're just a casual retail investor?
I would say if you're a casual investor, always do your research, form your own opinions, don't listen to anybody else. And unfortunately, that takes effort. But there's a lot of great opportunities and resources out there. Without being a shameless plug, our product is quite novel and different from what other people do from a business model perspective and just a product offering in general. You can find out more on our website, moonmortgage.io. But from that, thanks for having us as always, and do your own research.
It's been great speaking with you guys. Alex, do you have any words of wisdom to add to the watchers at home?
Look, guys, we'll get there. Just support us. There are other trade organizations, and if you don't want to do that, just write your politicians and explain to them, give them a use case, tell them that crypto is important. Support the industry, right? Support the good that this thing can bring to people all over the world, and hopefully we can finally build mature financial products. And then Catherine, would love to chat as well. I think we maybe are friends of the same friend. Him and I have done some interesting things back on the exchange day. So we're happy to chat afterwards.
Okay, excellent. We're going to wrap up the. Catherine, do you have anything else to add?
Sure. Just really glad to be on this panel. And, I'm always thinking about the mass affluent, thinking about folks like my mom, people who have very little knowledge, but are excited about what's happening in front of us in terms of financial innovation. How do we actually provide more resources for them to understand adopting new technology that can really solve these big issues? I got really excited when my mom texted me, "Oh, I actually, figured out how to pay this using my wallet. How do you do an integration? What's happening?" I think I've already brought some of that together. So love to, have more investors reach out to us at marketxventures.com, and let's get this together.
Okay, excellent. So we've got to let somebody else get into the space. We only can have 12 people backstage. So I'm going to ask you guys to go ahead and drop off and watch the YouTube link. But it's been amazing having you. Catherine, such an honor. Alex, it's been great talking to you as always. Aaron and Tristan, it's great to talk to you again. What a cool project. Thank you all for being on our show. If you go ahead and drop off and log on to the YouTube link, we could let everybody get on. All right,
Bye-bye,
thank you so much. So that was actually very cool. It's interesting. It's interesting the way that Web3 can actually try and create some of this social equity we've been talking about for so long.
Yes. Really nice interview. I enjoyed the panel. I think we covered most of the topics we wanted to cover, and I like the guests. They were amazing. And the next panel, it's also a great one. Should we start introducing our guests?
Yeah, absolutely. Let's go ahead and bring them on. I know that we had Andre was looking to get on, but we were full, so I'm trying to give him a second. But let me go ahead and bring on everyone. We'll start introducing. Let's go ahead, and we've got Galen from Axelar, my good friend Froze from Trondau, which is awesome. Good to see you again, Froze. And we've got Alex. How are you today, Alex? It's great to have all of you on board. Welcome.
Hi. Thank you.
Great to be here.
Hi, guys. Well, let's just go down the row. I'm also trying to give the other person from Hack Network a moment to join. Okay, here we go. We've got him. We've got Andrew from Hack Network as well. Hello, Andrew. How are you?
Hi, Justin. I'm great. How are you?
Good. Thanks for joining us. Sorry you had trouble getting in. We can only have a certain number of people backstage. Why don't we go ahead and start with you? Just go ahead and introduce yourself. Tell us a little bit about Hack. I know it's part of the Cosmos ecosystem.
Yeah, sure. I'm CTO and co-founder of Hack Network. Hack is a proof-of-stake, Cosmos-based, EVM-compatible, Sharia-compliant network.
Mm-hmm.
Our goal is to create a platform for DeFi and dApps in general, which are compatible not with the Sharia law, but with the ethics of global Muslim population.
Mm-hmm. Okay, wonderful. And it is a very cool project. We've had Islamic Coin on our Spaces show before. I know that Hack Network is home of Islamic Coin, and really, I'm just a big fan of Cosmos in general. Why don't we go ahead and take it over, Alex? Alex, why don't you just introduce yourself and your project? Well, it's Hack still, but still.
yeah, it's still Hack, but our vision is always like similar and slightly different as it tends to be. Yeah. So ultimately, we're trying to become like a bridge between the complex ethical Sharia finances and the Web3. That's like enabling this industry to the Web3, providing the solutions and the tools how can it be integrated and bring the value for the both sides, for the both industries. So yeah.
Wonderful. And it's good to speak to both of you today. Galen, why don't you go ahead and introduce yourself? Tell us a little bit about Axelar.
Sure. My name's Galen. I'm Global Communications Lead at Axelar. And Axelar is a secure communication layer that connects now, I think it's 45 chains. That number goes out of date very quickly. I know glad to see Hack on here and Islamic Coin. We're working with that team and a number of others, 100 plus projects that are connecting to multiple chains securely, doing things like bridging, but also general message passing and what we call interchain native dApps that span multiple chains, having logic, assets, and users on any chain in Web3.
Mm-hmm. Perfect. And of course, the man who has been on, I think, 2 other Crypto Unlocked. You're actually like you're the most distinguished Crypto Unlocked alum, aside from Jose and I at this point, and also with the most lustrous beard out of anyone I've interviewed this year. If I could grow a beard like that, I would. Go ahead.
I have to say I'm doing my best to match Feroz, but I still have a long path.
It's absolutely it's tremendous in my opinion. I mean that unironically. I love it. Feroz, go ahead and introduce yourself. And people have probably heard of Tron before, but you can tell us a little bit about what you do.
Well, thank you for the amazing introduction. You guys make me blush every time I'm on. I appreciate it. So my name is Feroz. I work for the Tron DAO in enterprise partnerships. I started in communications, and we do a lot of different things. Obviously, we're a layer 1. In the top 10, we like to dub ourselves the stablecoin highway. So we've got the #1 volume of USDT, and we try to facilitate as much as possible within the entire ecosystem. We've spoken with Axelar, multiple different teams on Cosmos in terms of integrating a light client, cross-chain messaging, cross-chain swaps. I definitely believe that it's the future. We have a multi-chain future, and we want to do our best to make sure we're working with as many projects as possible to facilitate that cross-chain interaction, cross-chain messaging. It's a really big ecosystem, and if we're going to succeed, we all have to work together. And so that's definitely one of my passions. I'm excited to get to talk to the founders of Hawk Network. Never met them before, so very nice to meet you guys. Galen, nice to meet you as well, and excited to get into this conversation.
Perfect. All right, I hand it over to you, J-Rod. You have the first question.
Of course. So following up on your comments for us about multi-chains, how do you guys think what's the importance of multi-chains for the crypto and the blockchain industry as a whole?
Honestly, I think it's like the most common sense future vision for this ecosystem. We have a lot of different chains that are very good at a lot of different things, but nobody is going to be the best at everything, right? And I don't believe that every chain has to try to do everything. Some chains are better with NFTs, some chains are better with DeFi. Like I said, I mean, we have a really robust DeFi ecosystem on Tron, but there are a lot of other chains that also have a lot of money, a lot of users that aren't exposed to Tron. And so just to be able to give people the opportunity to use protocols on different chains, different networks, and to be able to facilitate different types of business opportunities, I think requires different chains to be able to work together. And I mean, I got to give a shout out to Cosmos, and Axelar is doing an amazing job with doing the work that's needed to build the infrastructure to help different chains communicate with each other. If we don't have that, we all end up in these small siloed chains with like specific chain maxis, and that only leads to, that only lets us get so far in terms of building an entire Web3 ecosystem. So I think it's probably one of the most important aspects of blockchain, at least that's come about in the past year to 2 years. It's gotten more and more important. And as this infrastructure is built out, as these opportunities are built for chains to work with each other, even if they weren't initially designed to be able to do that, that's what's going to lead to the success of everybody in the space.
Mm-hmm. I would
Go ahead, Galen.
I think certainly chain specialization is something that where we've seen some very compelling steps forward. But I think kind of taking a step back, it's also like just kind of thinking about where the space might go, anything that crypto might be used for in the future. If we really are here thinking about a sort of a new and improved version of the internet that is doing any and more of the things that the internet does for people today in ways that are better for the user. You wouldn't try to scale the internet on a single stack. You wouldn't have one system running the entire internet. That wouldn't be possible.
Mm-hmm.
A vertical scaling vision for Web3 is not realistic either. Horizontal scaling is the only way that we can handle the kinds of volumes that I think everybody anticipates and thinks about having, right? If we're not sort of thinking about if we're not thinking about an economy that is handling information and assets at volumes that are too much for a single stack, then I'm not sure, why we're here. And that goes down to, I think, if you go back to sort of the Cosmos vision of dApp chains, which I think has, now gained a great deal of currency. I won't say like everybody is sort of following it, but I think at least everybody's aware of it and understands and respects that approach. I think it's, certainly there are applications on the internet today that require dedicated resources, that cannot share resources with other applications. And so the idea that we're all, that in a sort of a more complete future state of Web3, we're all going to be sort of competing in an auction for compute resources on a single chain, strikes me as a pretty limited view of Web3. And look, respect to the maxis who got us to where we are, but I think certainly the future is multi-chain, and it's a future just like the internet today, where it's an internet, it's an aggregation of networks. It's not a single network, and for the average user, they're barely even aware of that infrastructure that underlies what they're doing.
All right, perfect. What about you, Alex? What do you think?
Yeah, actually, here I would add that, I'm 100% on board with this approach. Moreover, my personal view on this, and this is something that we are trying to implement in Hack, is trying to become more focused on the end user, of those who are really maybe not fully aware of the chain itself, which is underneath some app, maybe mobile-based app, which they're using. And it's really the time when we just have to focus, or maybe just think more about the end user, about the experience, about the end product, which ultimately should be the goal of any service in the dApp. So one thing is where we do this constant push to develop the infrastructure and make a breakthrough there, like on the single chain, or like the chains integrate with each other. But here should be at some point we should think about the end client, because otherwise we're just sitting in a lab, and this is all it just became the race of the theory and technology for the sake of the technology. And at some point, sometimes you can dig into that so deep that you just forget why the initial purpose of what we're here gathered for. And at the end of the day, this is solving the actual real world problems. Yes, for example, within the Hack is just to bank unbanked, which was the first thing that we thought for. And it's important. It's very important to not to lose this ultimate goal, and to develop the technology in a way to solve the actual problems, rather than just do it for fun or for the sake of the development itself.
Yeah, I just want to say, so kind of both points together, right? What Galen and Alex said, we need to make sure that people can use what we're building without necessarily worrying about what chain is powering it underneath. Like Galen said, with the internet today, a lot of people don't even realize that we have so many different infrastructures set up to bring these networks together to make the full internet. And that's the same thing here in blockchain. We're glad to have different chains that specialize in their own things, but the end retail user, if we ever really want the masses to start using blockchain, it's our dream, right? In the blockchain ecosystem, we want to onboard the masses, the next billion users. If people are still worried about which chain is doing what, or how they can use a specific protocol, and which token they have to buy, and which wallet they have to use, that's not going to be very conducive to onboarding a bunch of new people into the space. And so making sure that interoperability is there, and that we're making it easier for the end user. The user experience needs to be very simple for onboarding and for using these protocols and these new tools that are being innovated in the space. And I think interoperability is really the bottom layer of that. Once they can work together, everyone can build very easy to use applications on top of it, and the end users don't have to worry about how it's working, or where it's working, or what chain they're on, or any of those sorts of things. So I think that's a really critical piece for this.
Mm-hmm. And it's an interesting point. I mean, at this point, I don't know that there's any holdout out there saying that we should be running all of DeFi on Ethereum, for example. In fact, I'm pretty sure that would be a disaster, or try and put anything on a single chain. So nobody is predicting a single chain future. And yet interoperability is something we strive toward, meaning we're still going in that direction. Is this an artifact of how fundraising works, where like we've got, we get people hyped about Solana or what have you, and they get kind of that team mentality? Is the profit incentive inadvertently driving people or driving projects away from interoperability up to this point? Is that something that has to be addressed? What do you think, Rose?
I think that's kind of an innate part of any business, right? Like, you want to make sure you're providing all the solutions and everybody's coming to you so that you can make the most money out of it. But that's also the beauty of decentralization. There are different people building different protocols on a bunch of different chains. So if you want access to those users, if you want access to that liquidity, if you want access to these new innovative things that are being built on other chains, at the end of the day, I think the larger vision kind of automatically goes towards interoperability, even if that wasn't something that founders or specific chains or specific protocols necessarily thought of when they were launching. They want everybody within their ecosystem so that they can have their users and they can make their money. If you really want true long-term success, I think it's just common sense that you're going to have to figure out how to work with each other to make that happen. Like, we can't monopolize the blockchain space. Like you said, if everybody tried to just do all of their DeFi on Ethereum, like, we see how much transactions cost to buy an NFT. If you're trying to make money, you're spending a lot more money per transaction. Like, there must be a better solution. And so even though there is a ton of liquidity on Ethereum, everybody knows that we have to figure out ways to be able to use those users. We have to use that liquidity and use it across different chains, depending on who has the best protocols, who's making the biggest strides in terms of efficiency and sustainability in their networks and their protocols, and be able to use those benefits to help our users and to help our chain grow even further. If we all keep it in-house, there's only a certain amount that any of us can grow, just trying to stick within our own ecosystem. So I think it may have been a problem, and it may still be a problem, but long-term, I don't see that problem winning. I see the interoperability as a solution that is going to take over all of the different chains. They're going to have to figure out how to work together. It's just a natural evolution of sorts in this space, I think.
That's wonderful. I mean, and of course I agree. I mean, the idea, I don't mean to pick on Ethereum specifically, although maybe a little bit sometimes pick on Ethereum.
Everyone has their pain points, man.
Well, it could be a little faster, it could be a little cheaper, but I'm sure it'll get there. The point is, there's a reason why Polygon's so popular right now. There's a reason why we need all of these layer 2 solutions and other networks. Galen, what do you say to people? I think at this point, it's probably the diehard retail investors who are, maxis about one token or another, who might take this position. But, counterbalancing the advantages of trying to be a single chain all-in-one solution versus focusing on interoperability, how do you counterbalance that trade-off? Because, of course, Froze is right, especially during the initial, pumping up the coin part. You really kind of want to be everything to everyone, but that's not a real long-term solution.
I think there's a lot there, and some of it goes to sort of fundamentals about, like, what are we doing? But with regard to Ethereum, I feel like it's true. The layered, like the layer 2 approach, the modular approach, I think, the Ethereum community is largely embraced. I think this is just my perception. And so I may be wrong about this, but I think for a lot of people, the fact that a layer 2 is actually a different blockchain is not is not necessarily something that they're thinking about. I think for a lot of individuals, in the space, and including, folks who do a lot of research and think about things, the layer 2 kind of has this aura of the layer 1 around it, like it's sort of part of the same network. But in fact, it's not. They are separate blockchains. They have separate consensus systems. And so that's why we need bridges that connect them. You need to have a secure way to bring assets from the layer 1 chain into the layer 2 chain, to bridge in stable coins, to bridge in native assets. And and that's distinct from everything that goes on sort of within, many of these layer 2 projects have their own kind of ecosystems in their own right, regardless of the connection to the layer 1. So I think that's something that needs to be emphasized. And then when you sort of think about like, why do people, balk at multi-chain or cross-chain? I think there's actually, one really good rational reason for it is that some people have lost a lot of fucking money. I mean, we were just talking about it internally today. If you go to Rect and look at like the list of the top hacks, there, like 6 of the top 10, I don't know. The majority of the top 10 are all bridge hacks. And that's not because bridges are inherently insecure. That's because bridging is the newest wave of technology to come along in Web3. If you look back in the early days of Bitcoin, it was exchange hacks, centralized exchange hacks. I don't think you see as many of those or as high profile as you once did. DeFi hacks were common in the early days of DeFi. You saw protocols hacked. You still see that. Rugs mostly. But I think by and large, the major protocols in DeFi are now trusted and secure. And I do think we'll get there with cross-chain. But I think people do need to pay special attention to the security models that underlie the projects that they're looking at. When they're looking at bridging or connecting chains, what is the security guarantee there? And I think, in a lot of cases in the early days, a lot of projects got a pass on that. And we've seen that, most recently with some pretty high profile collapses. I won't name names. So that's sort of part of the picture as well. Honestly, it's like been one of my favorite things to think about since I got into this space, which is about 6 years ago now. Is it really a good idea to provide people financial incentives? Do financial incentives provide, good outcomes in communities, in projects, especially with regard to open source software, for example? That was, I think, has always been one of the visions of tokens, right? Is that you sort of incentivize an open source software community. I think the sociological literature on it is voluminous and clear that cash incentives fuck things up. Sorry, pardon my language. Cash incentives tend to mess things up for things that otherwise, to work pretty good on altruistic basis. So I think it's something that we should examine when we sort of go in with the assumption that some kind of market dynamic is going to make things better. It doesn't always, but in some cases, maybe it can, and maybe there are places where we can apply it. Certainly that kind of, tribal mentality was vital to the growth of Bitcoin, vital to the growth of Ethereum. And I think, we'll continue to see that dynamic sort of push things forward in this new wave of the internet.
Yeah, I think that's a good point. I mean, I think it would be fair to say that, profit incentives have predictable results.
Right. That's true. When people like money, you can predict what their actions will be. That's true.
I'm pretty sure if we create an incentive and give everybody a dime every time they hit themselves in the forehead with a newspaper, we'd have a lot of people doing that professionally. But it wouldn't improve the world, at least not in any way I can think of.
Actually, here I want to jump in here because basically here. Once again, agree with Galen, but this is where the ethical finance actually entering the space, and not just ethical finance in general, but this, in our case, the Sharia compliant, like the hack, the Islamic finance is going to general. So because of all known restrictions and limitations that they have, like first of all, they're like these complex derivatives are banned. So basically, the money making. So the profit for the sake of the profit is prohibited. Thus, not a single Islamic bank went bankrupt throughout the whole history, because they don't do things that at some point in the past led us to the 2008 crisis. Yeah, so it's transparent. It is simple, so it's not that lucrative. So that's why it is possible to incentivize, maybe not incentivize people, because it's not about incentivization, but to have this like the business procedures and to have everything set up in a way that it not creating this purely like a purely money-making market, but serving as a tool to resolving like everyday issues, because the Sharia finances still have the loans, even though they're a little bit otherwise. They They don't incentivize someone to exploit just a liquidity provision because we have this AAA bonds upon the BBB and so on. So when the things start to just cascadely falling apart, so there is a balance which can be used, like between the actual profits and because if there is no money, then probably this is not going to sustain itself, and still have this not risk-free but very significantly decreased risk approach. So
yeah, no, absolutely.
I love what you said about transparency, by the way, like the idea that that you can see what's happening here, right?
It's,
right, it's visible. It's not the don't be evil, it's the can't be evil, right? And that could have saved us some pain, I think, with whatever, right? With not only FTX, right, but I think with some of the banks that we've seen fail recently as well.
We were all thinking it.
You think there was something shady with FTX, Galen?
Well,
the rumors. There are the rumors.
Sometimes there's a fine line between fraud and incompetence.
By the 15th time, Sam Bankman-Fried did an interview to explain that he's just a nice little guy and didn't mean to do anything wrong. I think by that time I was like, oh, I believe him. That $3 billion. Who hasn't misplaced $3 billion? Let that person get first. So.
Sure.
Now, what I find interesting about Hawk is it's by following Sharia law, you raise the question of whether kind of a panel of ethics around operation wouldn't be conducive to a more mature space. I mean, not necessarily specific to Sharia law, but like holding up any sort of standards is still kind of an incremental improvement in that way. I'd rather see more ethically driven or ethical standards coming up in blockchain projects. It seems up till now we are in another position, another inflection point in human history where technology has exceeded our philosophy around the technology. We have these things. We don't necessarily know. We aren't necessarily choosing always the right things to do with them up until now. Basically, so it's an interesting approach to it. Aside from Islamic coin, like how many projects are developing on your platform right now, Alex? Or Andre? I'm just asking out of interest.
Yeah, Andre, go ahead.
Yeah. Well, Axelar, we was one of the first ones with whom we integrated. Now, SushiSwap is preparing to go live at the same time as we list on centralized exchanges. There are some other projects which I cannot disclose, but I can tell you a number. It's 5 to 6 purely Web3 projects. The rest is, our ecosystem development mostly focused on Web 2, bringing Web 2 Islamic finance and lifestyle apps to the blockchain. By doing this, we're trying to get back to one of the initial ideas of crypto itself: to serve underserved, to bank underbanked. Especially in Islamic countries, it's still a problem. In Indonesia, the largest Islamic country, Alex, maybe he will. I might be a little bit wrong, but still, it's more than 60% in Indonesia. Citizens are unbanked, and crypto blockchain technology can help here. But not just blockchain itself. It should be a collaboration of the blockchain technology and some financial institutions. So here we are not the crypto anarchists. And while I have a mic, I just want to add to the previous topic. If we look at the traditional Islamic finance, we can see that the Islamic finance is not siloed. It is actually bridged to the non-Islamic finance, and here in blockchains we're doing actually the same. I look at layer ones and some layer twos as countries which need to do bridges. We travel around the world. We put money in different countries, and we go to the country not to use the country itself. We go to the country to meet some particular people or do some particular thing. We are just physically in this country. So blockchains in future, I believe it will be the same. We are not. We will not be using blockchains. We will be using some things which are under the hood use this blockchain, but we won't even think about this.
So guys, we have a project like Cosmos. We have also Polkadot that they're going deep with interoperability and aiming towards a future where chains can work together towards a common good, common, how do you say it? Towards a common path. So who is doing, thanks. Who is doing interoperability right at this time? Which projects do you think they're nailing interoperability or are at the forefront of the innovation?
Who's impressing you right now? It's a great curveball question we like to throw in there to see what you're really kind of thinking about outside of your own projects. Let's take that over to Galen.
Yeah, I'll say, I think, honestly, I mean, I'll be candid. My opinion has changed about Wormhole. I think in the beginning, I thought of Wormhole as a very centralized and kind of, they had the bailout by jump, not to throw mud, but that happened, and that kind of contributed to that perception. But I think as I've learned more about that protocol, I've come to respect what they're building, and I think you can see the results of that in the Uniswap assessment that came out. Uniswap did a great service, I think, by the way. We talked to a lot of projects, and of course, everybody's interoperability solution is the best. It's difficult for small projects who have limited resources to take the time to evaluate the security claims of an interoperability provider. And Uniswap, I think, like true to its principles, went in and did that evaluation in a very thorough and credible way, and did it in a sort of an open source and transparent manner. They published the results of that research. And I think, if you read through what they wrote about Wormhole, you can see that they've actually set up a fairly decentralized and robust system there. So I think, that's certainly one that we would look at and say, sort of credible and doing the right job. I do think that, and I won't sort of get into the negative side of it, but I do think there are many operators in the space that are, kind of messing up the category, if you will, by, sort of, calling something secure or decentralized when in fact it's not much more than a couple of signers or a couple of validators on a multi-sig.
Perfect. Go ahead, Feroz. What do you think? Who's doing it right now?
I honestly, for interoperability, I got to give it to Cosmos, in my opinion. I may be a little biased. One of my best friends is a big Cosmos head. But like I said, we've had conversations with Axelar, hope to work with them soon. Composable finance is another big one, helping to build a light client out to get cross-chain messaging for us. There's a ton of other protocols. Like I don't even know half of them. But I think Cosmos has some of the best infrastructure in place to be able to provide the opportunity for people to build cross-chain operations on top of it securely. And I think they also have an amazing community that has a singular vision of being able to work across chains to be able to provide this functionality that we all need. And yeah, I've just seen a lot of innovation in that space and a lot of thought being put into what is being built and how it's being built. And first and foremost, the security that's around it. When we get into cross-chain or interoperability, everybody's sacrificing something. You're either sacrificing security, you're sacrificing flexibility at some point, where Cosmos does a good job, I think, of trying to balance all of the different aspects that go into making something interoperable and trying to find the best way forward. But I work for a layer one, and so we're focused, very similar to what Hawk said. We're focused on serving the underbanked and the unbanked, whether it's in Africa, South America, Asia, like all over the world. There are billions of people that don't have the ability to do simple banking procedures, and so that's been our goal. And then we do our own research to see who is building out the infrastructure to help us go cross-chain, to help us connect with other protocols and other chains. And the Cosmos ecosystem has been very, very outgoing in terms of reaching out and saying, hey, we would love to plug into your network and give all these other chains and all these other users the opportunity to be able to use the liquidity that's on your chain, that to use the stable coins they're using anyway, and use them in other protocols and other places that they don't currently have access to. So again, I think I'm a little biased because we've had a lot of people reach out to us and offer that help and support in building out the infrastructure to help us be more interoperable. And so I really love that future vision and people really, going after the same thing and being able to connect chains together. And the people in the Cosmos ecosystem have been doing an amazing job at that. So that's where I'll check my box.
Let me just chime in and agree with that 100%. It's I think we were talking about maxis earlier. There's like one group of maxis I sometimes agree with, and that's IBC maxis. IBC being, of course, the sort of protocol on which Cosmos is built, on which interoperable chains within the Cosmos ecosystem are built. For those of you who haven't spent a lot of time there, and I will agree with you, Froze, 100%. The water's very warm in Cosmos. People are very friendly and looking to connect and expand and interoperate in new ways. Sorry, didn't mean to talk over you there, Alex. Just wanted to chime in and say that.
Actually, I just want to pose the same question to Alex and Andre. You're in the Cosmos ecosystem, which is very much about interoperability and dedicated chains. Who's innovating in the space right now that's impressing you?
Yeah, I will. Cosmos, of course.
Wow.
It's by default. Yeah. After Cosmos, EVMOS, EVM OS, we used a lot of their work. Actually, they are making Cosmos, Tendermint, and EVM like friends, and they did not just add an execution layer on top of Tendermint consensus. They're also building bridges between EVM and the consensus itself, so that we can write code in Solidity which calls into the Cosmos consensus. They are doing incredible work, and we are trying to keep up on all the fresh commits and incorporate their new developments in our chain. And hopefully soon we will be contributing back after we finish with our core functionality. Second, Skip protocol. I am fan of these guys. They are also Skip protocol is also Cosmos-based network which focuses on good MEV. They're helping arbitrage traders to make their trades to be executed quickly on other Cosmos chains. But they are also making sure that this front running does not harm users. So, for example, they ban sandwich transactions. Besides doing this, they are actually contributing to the Cosmos ecosystem a lot. For example, they have this component which it's in beta right now, but POB. It's called POB. You can now customize the way how transactions are put into the block. I met Skip founder in Paris a few days ago, and he suggested me using POB so that we let's say just 10% of block can be taken by transactions which interact with non-Sharia compliant smart contracts, and the rest will have, for example, some gas discount. This is possible thanks to their contribution. And the third project is Sila. I very like I like very much their product approach, how they don't just focus on the technology itself. They are also building bridges with the traditional finance. For example, they have this API to send crypto to a grandma who only has a phone number. It's a cool feature with which we also plan to integrate. And they don't like degens. They don't like this meme coin trading. They are focused on ethics, but different kind of ethics. We like, I consider them like a twin in parallel universe.
Mm-hmm. Alex, I just wanted to ask before we wrap it up, because we're going to have to move on to doing the interview with Baron Davis. Are you guys, have you taken a look at the mesh security or mesh network initiative that was begun by Sunny Agrawal and the Osmosis project in terms of interchain security?
Well, I guess me being not very technical guy here, not the best person to answer this. I mean, probably, but the mesh network Andre can answer much better rather than myself. Mm-hmm. Yeah, because my as the previous question, my Shell is my personal favorite as well, after the Cosmos, of course, because I like the chains who interact with the real world and finding and building the solutions of how to do it. And the Shell has one of the most vast and the evolved network of the ramps on and off, and they do provide this interoperability with the various chains. So yeah, I like this kind of work when the interoperability goes beyond the blockchain itself and goes to the real world assets. Yeah, but Andre, back to you with the next question.
Yeah, actually, when I first saw these plans to implement this interchain staking and mesh security, this was that was the moment when I started rewriting our white paper, because in our initial white paper, top 5 validators had the right to do some important decisions, but at this moment I understood that in a few years, or maybe even months, we'll see that network will not be powered just by just our validators, but there will be some validators from other networks. So yeah, we look closely for after this initiative, and most probably we will join.
Well, wonderful, guys. Honestly, interoperability is just foundational to growth in the space. So we appreciate you taking the time to speak with us. Wonderful to have such a group of people who are really working with this and making this happen. Jose, what do you think? Should we wrap up and get ready to go on to our interview with Baron?
I think that interoperability and building towards that goal is essential for the future of crypto, and specifically, in my opinion, is essential for the future of implementation of Web3 towards all of the industries, NFTs, and smart contracts. For example, having guarantees in case there's not a specific amount of rain, if you're a farmer, or if you have other types of smart contracts that run verifying actual real world scenarios. For example, the climate. If you have a chain that verifies the climate, then you can run other smart contracts being in relation towards other chains that can verify real life scenarios. I don't know, not sure if I'm pretty clear on what I'm saying, but it's interoperability allows all of the industries to start building and creating if scenarios reacting to other chains. So building towards that goal, it's essential for the future of this industry.
Mm-hmm. Yeah, absolutely. And it's been great speaking with you guys about it. We could ask a security question in the meantime. Bridges, because I think Baron is Baron. We need you to get your camera on if possible. We're going to bring you on for the keynote momentarily. But in the meantime, in terms of solving the security issue, obviously bridges are proving to be problematic. It seems like the same, in terms of hacker behavior, it seems like the same was true in Web 2. The same was true in 1999. If you were going to get your site hacked, you would get some utility you installed from Microsoft hack. They would go in through a back door. And it seems like blockchain has the same problem. We have immutable systems that are, of course, resistant to kind of malfeasance on some levels, but the bridges are a weak spot. Ultimately, what is going to be the solution to be able to handle that? Are we just going to keep working with better and better patches? Galen?
I think real briefly, the answer is, from Axelar's perspective, certainly to connect blockchains using similar trust assumptions and security guarantees as the chains themselves. So most of the chains that Axelar connects are proof of stake, and Axelar employs a proof of stake system, proof of stake consensus powered by AXL token for economic incentives, dynamic validator set, slashing. We have 75 validators. I think that's the most of any interoperability solution. And that set is dynamic, meaning anybody can provide security on the network if they can accumulate enough stake. So that's the same principles that are applied in Ethereum, Cosmos, Polkadot, and beyond. And from our perspective, that is the most, decentralization equals security, and the more decentralized you can be, the more secure your communication will be.
Okay, wonderful. What do you think, Froze?
I 100% agree. We've seen the changes happen from lock and mint bridges, which had a very big hole for people to be able to break in and steal the crypto that was locked on one side of the bridge. And there's been so many different types of hacks throughout the past couple of years when it comes to bridging solutions. I think it's going to continue to iterate, continue to innovate, and get more secure. We do a lot of research before we decide to partner with someone. Axelar has definitely been one of the best composable. We have router protocol. It's a handful that we really look for a long time to see what they're doing, what experience they have in the space, and what they're how they conceptualize security when it comes to bridging. And when security is your number one focus, that's definitely a very, very good sign. And I think that's the space we're in right now. And that's what we need to continue to focus on is making it as secure as possible. And I think we're doing great so far, and I'm excited to see where bridging solutions go in the next year.
All right, excellent. Alex, Andre, do you have anything to add? Where should we be looking? Are we just going to be in the situation of improving bridges here? Or what's a more forward-looking solution to solve the security issue and interoperability?
Well, I have very little to add to what just have been said. I just like how 1inch protocol they implemented their functionality long time ago, and since then they just audit, and more audits. So that's if I'm not mistaken, they are like one of the most audited protocols in this space. So maybe we should do the same with bridges.
Right. Okay. Well, guys, thank you so much. It's been such an honor. I don't see a lot of panels put together, Jose, that have a lot of major L1s on, and I think it's kind of an amazing thing to do. I think it's great to have this kind of dialogue.
Interoperability.
Did I say interoperability?
Yeah, interoperability online.
We can have this conversation. That's interoperability.
Yes. Yeah. Sorry. Been talking for a while now. But it's fantastic to have this opportunity to do that. I think we're going to go ahead and wrap up the panel. But thank you so much, Axelar, Tron, and Hawk, for joining us. We really appreciate your contributions.
Thanks, Justin. It's been great being here.
Thanks for having us.
Thanks, guys. Take care. Good having you on the show.
Bye.
Bye, guys.
Bye.
All right. So
great chat.
Yeah, absolutely. So we are going to bring on Baron Davis, entrepreneur, investor, a 2 times NBA All-Star. He's going to be talking a little bit about his entrepreneurship and his journey in Web3. And then you want to queue up what's coming after that? We're going to be doing crypto charts with Gianna. Do you want to tell us a little bit about that, Jose, so people know what they're looking forward to?
Yeah, of course. We're going to see some charts, dive into some prices. It's something that we don't regularly do, and I would like to start doing it, seeing the crypto market, how it's unfolding. So yeah, let's go with Baron.
All right, let's go ahead and bring Baron on.
All right, hello everyone.
Hi, Baron. How are you?
Good, good.
Hey, Baron.
Thanks so much for joining us today.
Thanks for having me. Appreciate being here.
It's great to have you. So, you're another great success story, having killed it in professional basketball, and then transitioned to entrepreneurship, to creating opportunities in this high-tech space of Web3. Tell us a little bit about your journey. Obviously, the two don't necessarily seem to go together, but I'd love to see how you pivoted from one to the other. I always think that's very interesting to see how people expand their horizons, do something new. So how did that go for you?
I think for me, we have a program and a platform called Big Business Inside the Game. And, I always say I got my MBA from the NBA, and now I'm working on my PhD in basketball. But if you think about, all of the opportunities that we're exposed to in the NBA, you think about, you think about all the different industries.
We're back.
You think about all the different industries: production, concessions, traveling tickets, tech. There's a lot of NBA partners. And so, with Business Inside the Game, I kind of made it like my study guide and my study kit.
Mm-hmm.
And just knowing that, for athletes, we have a certain type of DNA. We're motivated by winning. We're motivated by results. We're motivated by, trying to achieve perfection. And so that is a transferable trait into any industry, because you have to learn. We learn through practice, through plays, through interacting with fans, dealing with media all the time. And so I think, for me, it's really whatever you choose to do, you take that DNA with you, right? Because you'll find the right people and you'll find the right team that you can be a part of, and you'll ultimately find a winning team that either you put together or you're on a winning team, but now you get to learn and be in the same practice mentality that you were, when you play basketball. And I don't think that, technology or anything is probably science and being a doctor, but I don't think anything is as hard as, learning the game of basketball and playing it, over and over and over repetitively, and having to learn and be aware of everything around you. So that's kind of like how I transferred my skills. And then curiosity kills the cat. So I'm very curious and very creative. And so just looking at different industries and saying, how can, people of color, how can other athletes, how do the underserved athletes, right? Not just the superstars, how do the other underserved, or the majority of the middle class of athletes, find their way? And so, for me, it's just really kind of being a pioneer and, taking on these challenges and learning them, and then being able to articulate them back to our culture and our ecosystem.
Right, definitely, and we want to think in the crypto space and the Web3 space that we're helping to break down barriers and create access or a more equal opportunity to access to financial services and so forth. And you're not there are other pivots, by the way, like Stu Bullard, who is on Dre's production team. Went on to he was working with the stems and the technical part of being a producer. Then he taught himself to code, and now he has his own blockchain project. So like, where did it's amazing to be so good at one thing and then move on to something so technical in addition. Usually I'm talented in one area. There are about 5 things I do.
You only know,
You
I
know,
don't know that. Yeah, but that talent transfers industries.
True.
So it doesn't matter. You can be, you could be a chef or opening up a restaurant. That if you stayed in that industry, your talents would have, reigned supreme.
Have you been able to see some of that? You know, because we did a hip hop show the other day, hip hop and royalties and Web3. Always such a cool crowd, actually, because they really support each other. I wish everybody else in the space supported each other as hard as they do. But have you seen like new opportunities for yourself and for others, or more equal access? Because traditional finance is pretty good at keeping people out.
Yeah, crypto finance do a great job as well. So you look at the layer ones, the layer twos, whoever got funds or big endowments, they're doing a great job of keeping, minorities and people of color and athletes and, people who don't look the part. So, we're still at a disadvantage because one of the language, the lingo. I think that Web3 is at a disadvantage because of the language, the lingo, and who they are giving the opportunities to. And so when we have an argument around Web3, it's always, the two main things that we communicate about is community, right? And utility, right? The technology, I don't code. Like, that's one thing I don't do. I don't code, but everybody's playing in the same space. Everybody's building the same thing, but nobody's building, the community and the utility. And so, for us, our idea was to create utility, create community, create brand, find the right chain, right? And then with that, you take the right ecosystem of artists, you take the right ecosystem of athletes, music producers, and now you have, a home, you have decentralization, you have community investment, and a community building out a platform. And so I honestly feel like, a lot of the layers and a lot of the big funds, they're overlooking the people who are actually building dope shit. You know what I mean? And a lot of times the people that are building dope shit can't even get in the building. And so, I think that, our aim and our focus should be, pay attention to the people who are coming in, who are busting their ass to try and make this a thing. And as we saw, the first wave of Web3, they went celebrity, they went highbrow, and everybody was getting scammed. You know what I mean? Because there was never, ever a utility behind anything that people were articulating. You know what I mean? And so now we have to make sure that we protect the greater majority of music artists, actors and actresses, athletes, creators, because ultimately it hurts them, right? They never got a chance. Like when their time in line came, the money dried up. When their time in line came, opportunity dried up. And the celebrities and the people who have, who already have buku's amount of cash and visibility, they're kind of ruining it for everyone else because they don't care. It's just a marketing deal.
Right. Yeah. No, those are all great points. I want to do justice to all the projects that you're participating in right now. I know that originally we were talking about Cell GPT, so I want to let you give an opportunity to tell us a little bit about what's going on with that. But I know you've got a few other projects going on, so why don't you just unpack that for us a little bit so we know what you're doing?
Yeah, we started a firm called, or a creative agency called More Than Us. And so community-based, partnering with other developer, artists, builders, and looking at projects as an ecosystem. And so what we do is we try to articulate how Web3 can work and act and amplify Web2 companies or Web2 IP, if that makes sense. And so one of our projects is big, Business Inside the Game. And that experience is a membership club thinking about, we travel together, we roadshow together, we go to these conferences. So it's based around experiential networking, event tickets, Super Bowls, All-Stars, things like that, and really amplifying and helping build the next entrepreneur and helping the next entrepreneur find the next investor. So that's one. And we got a grant from NEAR to do slick images. And slick images for me was something I looked at photography.
And I said, that's the baseline of all content. Photographers are the most underserved. And so all of these photographers in hip hop culture, in basketball culture, right, that are taking all these photos of, NBA players in the off season, at the Drew League, right, in their workouts, at fashion shows. Those are the photos, to us that are going to be valuable 20 years from now when we want to know, the players outside of just their basketball profile. And so with Slick Images, the goal was to create a blockchain database where we can house, store, and distribute photos, and publishers and photographers who are publishers can now license their photos and their work on our marketplace. And so all of this kind of works hand in hand. When you look at Sales GP and the investment there to the Bermuda team, it was really about team ownership and, bringing a Web3 and bringing this new ecosystem. I say new ecosystem instead of Web3, bringing this new ecosystem to the fold. And so looking at something like sales racing and boat racing, and, one, it's a sport. It's a great event, a great environment. And so it's a great opportunity to network, hang out, and, talk business, but also, bring in the right people, in this space that we can congregate, have the right festivals, have the right summits, and really talk about subject matter and find the next, great company or great product, to bring along, in a team atmosphere, right? And so when you think about Sales GP and, league ownership and team ownership, for me and for, Slick as a venture, at the core of what we've built is content. And so being able to amplify creators, giving creators equity, in publishing companies, and to be able to create, new IP and new opportunities, and then give them distribution. I think that's kind of where we have, made our stake in this space. And, we have the talent. We have the talent, we have the community. Obviously, we are always looking for the right protocol or the right investor, right? Because there's so many people in this space. And the last thing you want to do is take the wrong money or be on the wrong chain, and then you won't be found. So, for us, it's really about building IP. We trademarked Black Santa. We have a Black Santa video game coming out similar to Mario Kart. We have one of the best Web3 meta architects. So a lot of the characters in the games that we're building are, going to be built in game engines, and the storytelling will be built in game engines. So with Black Santa and the world of You Wish, where she comes from, it's a whole host of characters, IP for family, thinking about education, edutainment, songs, animation, and, how can we as a family, kind of congregate together and celebrate cultures and different cultures, through content.
You make a great point about, they're not necessarily being equity of access these days to funding. As an entrepreneur, I imagine that there's a lot of doors there's doors to knock on. There's other doors you have to kick in or find another way in. So what is your advice for other people who are in the same situation, who are sitting there having, maybe having taken a very different path up till now, looking for a break, have a great idea for Web3? What's your advice to those entrepreneurs who have to hang in there and get people to see beyond Silicon Valley?
Well, you just got to take your idea and you got to build on it, right? You just got to keep piecing it together until it's not an idea. It's an actual proof of concept. It's an actual product. We say ideas are great, but they can't do anything for us unless somebody, pushes it forward. So I would say ideas not only need to be manifested, but they need to be proven. And so we work in proofs and solves, solution solving. And that's how we get the idea into a product. So I would say for people with ideas, great, keep the idea, but find the idea and build on the idea until it's a proof of concept. And then also it's hard to say this, but don't accept no for an answer. Don't let no be a deterrent in, in your climb as an entrepreneur. Look at me, they're telling me no, so yeah. And, I have, a great career in basketball, a great investment history, but, you still have to eat the no's, right? You have to sit there and it humbles you, and, always ask why no, so you can always go and fix things. And so for me, it's always been like, there's hardly ever no's. They just disappear because they're scared to say no a lot of times. But, always great advice and great feedback. I come from the world of sports, so we're not afraid of rejection. We're not afraid of criticism. We're not afraid of constructive criticism. And so you just got to keep practicing. You got to keep practicing. And when your day comes, you can prove, you prove to everybody what you were building or what your idea was as it comes to fruition. But, the whole point of building on an idea is building and bringing people on a team, you know what I mean? Making people aware of what you're doing, you know what I mean? It's not the media, the marketing, it's really like the door-to-door salesman, the door-to-door builder. And how do you put together the right, ecosystem of 10 people? And if you can get 10 people to believe, you can get 100 people to believe. And then, economics start to work itself out from that perspective.
That's great. And I, from the very beginning, from the Bitcoin white paper on, the idea of creating more economic access for everyone, creating a more level playing field. In the meantime, we've got over 6 billion unbanked and underbanked people across the world, hundreds of million, or actually, I don't know the exact number, but it's a fairly large number in the US alone for that matter. Do you think, do you see projects addressing that now? How far do you think that is into our future?
A lot of people talk about it. I think, in all honesty, that is just like a social trope for people to raise money, to raise money, and to get people to believe. Is it needed? Absolutely. When you start thinking about our world is getting smaller. International is getting smaller. Travel is getting smaller. When you look at just the NBA, now there's over 100 international players out of 450, right? And that number is growing. And so just thinking about, how to build a holistic ecosystem, I think that is like the main goal. Right. And I think that it's going to really come from, deploying to the right people, engaging with the right people, engaging with the right leagues, presenting the language to the outer community in a marketing perspective. That's going to allow people, right, to be able to adopt this, because when you think about the unbanked, they're not adopters. They didn't even adopt to the bank. You know what I mean? And so, like, how do we get them into, the spirit of adopting first, right? And then how do we tell them that this is good for you, right? And then how do we tell them this is safe for you? And then how do we tell them this is not only good and safe, but it's something that's easy and it's going to benefit you in the long run? And so, it's, Web3 is, to me, a car salesman business. It's a car salesman business until, the right kind of car comes along that everybody wants to have and want to ride in. But I do feel that when you think about underserved people, right, and you've raised hundreds and 200s and 300s of millions of dollars, the last person you're going to talk to is an underserved person. Right. You know what I mean? The last person you're going to have any insight from is an underserved person or an underbanked person. And so a lot of these, CEOs and people like that, they need to either delegate resources, bring in MTU to help you figure it out. But, the resources are not going to the people that can actually help us get over the mountaintop.
So what would you say, in your adventures in Web3 so far, what would you say is the key 1 to 3 things that you've learned coming out of this?
Patience,
Be patient. Do your due diligence, right? Because there's some great chains, there's some great companies. So figure out what's right for you. But then the third I would say is build your ecosystem first. This is a great opportunity, whether it's an NFT or a token or whatever it is. Build your community, because as the world starts to change, as the world gets bigger and smaller and more crowded, just think about when you go to, a festival or an amusement park, you want to go with your friends. So build your community now, and I think it'll pay off in the long run.
Beautiful. Well, thank you so much, Baron, for taking the time to speak with us today. It's an honor to speak with you, and we hope you come back soon.
Thank you very
Thank
much.
you.
Thank you
Back.
very much.
Thank you, guys.
Thanks for joining.
Thank you.
Beautiful. So why don't you go ahead and introduce the next segment, J-Rod?
Of course. Now it's chart time. Time to see some prices. We have our own, the biggest, the one and only, our trading analyst. He's going to see the prices of crypto. How's the market? Any questions, please drop it on the comments. Let's welcome Gianni. Welcome, Gianni. How are you?
Howdy. How's everyone doing today?
The pronunciation, it's okay? Dissect or?
Yeah.
Perfect. How are you doing? Welcome. It's the first time. Man. I'm really excited to have you here.
Yeah, I'm glad to be here. Thank you. I'm ready to go through some charts with you all.
Of course. How's the overall market? I know we have Bitcoin around the lines of 30K, moving towards 31, going back to 29, like maybe lateralizing towards those two lines. What are you seeing in the charts? How's the market?
Well, the crypto market is pretty bifurcated right now. So, we had some pretty impressive runs in Bitcoin and Ethereum year to date. We've had a few altcoins do very well year to date, but I would say, J-Rod, the majority of them are really just in choppy, trendless ranges right now. So it really is, in the stock world, we call it a stock picker's market. I would call it a crypto picker market. So you really need to know which coins are in the clean uptrends and concentrate your buying efforts on those coins, I think.
Great. So a question before we dive into some charts. I have some traders tell me just see one token, others they're going to tokens with no volume. What do you choose when you are selecting the pairs to trade, when you're selecting which charts to analyze? What's your main bullets to check to say, okay, I can trade this asset?
Sure. Well, you raise volume. That's a good point, because when you trade a thinly traded crypto, it's just like trading a penny stock. It's really easy to get rug pulled, right? So you want to make sure that you're not selling into a void, that there's going to be a buyer for your sell. And even when you're buying, you don't want the price of the coin to limit up on your buy. So volume is important, but above all, the trend is your friend. I want to see a crypto coin making higher highs and higher lows, and also displaying what I like to call relative strength. So is it outperforming the other coins in the sector, especially compared to Bitcoin or Ethereum? If we're seeing an altcoin outperform Bitcoin or Ethereum to the upside, that's one that I think needs to be concentrated on.
Great. And just a small comment. It's interesting how crypto is maybe changing the landscape or the study of technical analysis, because most of the initial coin offerings have like this kind of a specific spike at the beginning, and trading cryptos with like really short trading time frame, it's like an art itself, because you can't rely on the experience or on the chart. It's like brand new. So have you any experience trading like really new tokens?
Well, that definitely is a challenge. And, if a stock is new, I generally try to avoid the newer issues. So I like to give it, a few months of price action to see, is it a volatile coin? Is it a stable coin? Not like an actual stable coin, but I'm saying that with respect to volatility, and kind of just feel it out and see what type of characteristics the coin is going to display. Because that's important when it comes to risk management. If a coin's fluctuating 20, 30%, once a month, you have to basically calibrate your own trades to adjust that, price range. So yeah, I wouldn't jump the gun and buy a coin at the ICO. In the stock world, there's a joke among traders that IPO stands for it's probably overpriced. So I don't know what the acronym for crypto is yet, but I'm sure we'll figure it out in time.
That's funny. Let's move on and let's. Are you able to share your screen? Let me see.
Yes.
There we go.
Yeah, looks good.
That's great.
Okay, so let's start off with Bitcoin here. Bitcoin is the flagship cryptocurrency. So I think, it's kind of like a rising tide lifts all ships. So most of the time when crypto is doing well, it's because Bitcoin is leading the charge. So, the biggest thing that I see here, we have this nice broadening wedge formation. You have this upper horizontal trend line acting as resistance. You mentioned that $30,000 to $31,000 area. That is key technical resistance. And then we have this lower downward sloping trend line here. Now, this is a pretty constructive price pattern. And what I like about it, J-Rod, is it's been consolidating in this range for about 4 to 5 months. So to me, that falls into the category of bigger the base, the higher the space. I am looking for another leg higher in Bitcoin. There's a lot of key technical support in this $27,000, $28,000 area. I do think that we have to favor the bullish outlook in Bitcoin as long as we're above 27,000, 28,000. If we start to drop below there, I'm going to be a little concerned that, this sideways price action could go on longer than most would expect. But basically, if we start to see Bitcoin close back above 31,000, I think we get a nice rip higher into the $35,000 to $36,000 area. That's been my price target since the beginning of the year, really. And at that point, I think it's anyone's guess what happens next. I'm not really in the camp that we're going to see a return to new all-time highs anytime soon. There's quite a bit of overhead technical resistance, but that doesn't mean that there aren't tradable opportunities. But I don't think, and this is very important from a technical standpoint, I don't think we're in that buy and hold environment where, it's going to the moon or, diamond hands type of phrases. I think we have to be very careful when it comes to risk management in crypto and really shorten our time horizon when on the long side of this market. So that's how I see Bitcoin. Do you have any questions on that?
So you're waiting for the setup to align, right? You're waiting to execute.
Yeah. I mean, I've been long crypto since the start of this year. Really, it started accumulating at the end of last year. But the key resistance zone that I'm watching is the $30,000 to $31,000 area. If we clear that, it looks really good. We're in a neutral range right now. So, you got resistance at 30, 31K and you got support at 27, 28K. In between there, who knows how long it'll last. But if we resolve above, it's bullish. If we break below, I think we need to, play a little defense.
Great. What other charts do you have for us?
Well, I was flipping through my charts this morning, looking at some of the ones that I think are the strongest coins. I like the setup we got in Solana here. Solana, kind of a similar pattern that we just saw in Bitcoin. We had this big broadening wedge formation here, and we did start to break out from it back earlier in this month. Now, we did take out resistance. We came back down below. But what I like is that we got this overbought reading on the RSI indicator here. So to me, it kind of looks like we have a retest of former resistance. And as long as Solana's above, $22 to $23, I think you got to favor the bullish outlook. I'd like to see Solana hit, maybe $40 to $42 per coin. This is actually one of my favorite ones when it comes to the actual story behind the issuance of this coin. But I like Solana. I'll share a couple more with you.
Before moving to the next one, when you're a trader and you have an asset like Solana that has a story of sometimes failing the network or stop working, how do you assess that risk? That it's separate from the chart itself and the price action?
No, I would actually argue it's already included in the price action. So as a technical analyst and trader, I basically operate with the assumption that price is going to reflect most of the information circulating around the coin. Someone out there probably knows something about Solana, and they're going to take action accordingly. So at the end of the day, I've seen numerous instances in markets where bad news leads to rallies and good news leads to declines. So at the end of the day, I'm just going to focus on price and trade what I can control, and that's basically risk management.
Great reply. Great reply. And do you use leverage with the stop loss, or you do more spot trading?
No, spot trading. Yep.
Great.
Yeah.
Great. It's amazing to have you here. Also, please in the comments, if you want to analyze any specific crypto, drop the comments. Smash the like buttons, because if you do, we're going to bring Gianni back. So please comment and smash the like buttons. And
I'll share one more coin. I'll share one more coin, and you can tell me if there's anything else coming. Synthetics. I like what's going on in synthetics as well. We can see a pretty important resistance zone in the $3.20 zone. Looks like we're kind of building a saucer formation here. Normally I would be concerned with this oversold reading on the RSI indicator that accompanied this low back in June. But we had a pretty nice rally off of that low, and now that we have another overbought reading, I'm a little more confident in the momentum regime. I think bulls have the edge here. But with synthetics here, I think if we start to clear this, let's call it 310, 320 area, I wouldn't be surprised to see this one hit $4.50, $5 a coin.
Great. Remember, for the audience, remember that you can see. And we are distributing Gianni's analysis on the Benzinga Pro Insider report only for 90 cents a month. So do we have a link? Maybe the producer can drop a link in the comment section for you guys to go and check it out. It's great. And you have always Gianni's insights in your email.
Yes.
With three trades per week, right? More or less.
Yeah, so the insider report, we give 3 equity swing trades per week, and then at the end of the report, we do a crypto update each week. So sometimes I'll go back and forth between Bitcoin and Ethereum, but if there's an altcoin that I like what's going on with, I'll share that chart too and give a technical breakdown on what's going on.
Great. Yeah. Well,
thanks for coming here, Gianni. It's a pleasure, and hope you can join on the next one, because I really enjoyed this section. Justin, what do you think about price action section? We're missing.
Yeah, I think it's interesting. We should do it at the beginning of the show too. I think that was that'll be a good idea. We'll do it at the top next time.
But Gianni is a natural.
Yeah, absolutely.
Yeah, I really enjoyed it. Thank you very much, Gianni. See you later.
Okay, see you next time.
Thank you.
Bye-bye.
That was Gianni Di Pozze, our crypto analyst at Benzinga. What a great insights. I really enjoyed this section, Justin.
Yeah, I did too. It's good to get some more market discussion going on in there. Usually not my main thing that I'm talking about, so I'm happy for us to bring in somebody who can do that for us and provide that content to people. But overall, it's been a fantastic show.
Yes, sir. It's been a fantastic show. And remember, we're starting to set up everything for our next Future of Crypto event live in New York. We have big names there, and you can't miss it, right, Justin? Are you going to be there? Because you can't miss it.
Yeah, I'm absolutely going to be there, and it's incredible. I mean, really, guys, like, we've got a small group of some of the smartest people on our editorial side. And I think that's really what makes a difference about this show, honestly, is that the people who are making the choices about the guests are also people who are in the Web3 space, who are native to the space and know what they're doing, right? So we're starting out with really, really big names. We've already got quite a few excellent confirmations. I rattled off a few in the beginning. There are others. Kevin O'Leary is going to be there. Alex Salnikov from Rarible is going to be there. Really some of the smartest interviews I've done over the past couple of years. So definitely looking forward to it. It's a one-day event. It's going to be packed full of crypto information, or I should say Web3, because it's crypto and also NFTs. So it's a good, well-balanced show to go to. Last year we had Yacht Club there, so that was cool.
Of course, when we say crypto, we're meaning the entire crypto and blockchain space technologies, from AI to the SEC and the regulations and the actual scenario worldwide. We have representatives from all over the world, big names coming from Latin America to show how crypto is changing the path here. And well, also, of course, we have representatives from specific projects and cryptocurrencies, but we also covered the entire blockchain industry, right?
Right, absolutely. It is not about coins. It's not, it's not like your classic 2016 hype event. We're here to talk about real world use cases and the way that that the Web3 space is making life better for people on Earth right now. And in the meantime, thank you very much, Jose, for being a great co-host today. Really enjoyed today's show.
Bye-bye, Justin.
Thank you. I don't know if is that your music? Okay, bye.
Yes, sir. Fade out music. Magic of crypto and luck.